that's going to help her become a successful business. Um, Steve, why don't you go ahead and start by talking about your organizations, and then I'll take it from there and
Good
make
deal. Good
sure
deal.
that she gets all the attention. Every question you have to ask Ms. Johnson,
Well,
it gets
well, the
answered.
good thing
Okay.
is that this will be going on YouTube as well. So for folks
Okay.
who did miss it, they will get a chance to go back and review this. So I like doing this no matter if I have one person or if I have
Mhm.
50 people, it's all pretty much the same. So
That's
just a little
all. So
bit,
you are recording. You are recording
it's
it, right?
recording right now.
Okay, great, great.
So so these workshops are being done, if not every month, every other month, through Sigma Delta Sigma, which is my fraternity, in partnership, Letitia, with the Edge Connection, which you are familiar with the Edge because of the program that we did with the organization that you were a part of.
Mhm.
The Edge stands for Empowering and Developing Georgia Entrepreneurs. And of course, they are a micro enterprise organization that seeks to ensure that people learn how to start, grow, or expand their business, as well learn whether or not if business is for you. So we are exploring the idea of being an entrepreneur, and these workshops is a part of that exploration. Sigma Delta Sigma is a fraternity that has program Bigger and Better Business program that we are have a focus on ensuring that people who are in business learn the skill sets to become bigger, to become better, and to be able to offer their services to those folks that are in need, and like I mentioned earlier before, creating need. So we're forging our resource and our talents and our reach to come together to make sure that these workshops are available to the masses. And in most cases, they will be free. Some cases, they may be a small fee, depends on the type of program. So today, our program is going to be talking about funding resources, funding situations during a pandemic. Now, this is something that I don't think most organizations a couple of years ago, or even further than that, whatever thought that we would be in a pandemic like we have in the last almost year and a half now. And what banks and micro lenders and investors, what they have come to learn is that when we are not prepared to go through a significant shift, that they are more in risk of losing, because so many businesses have had to go out of business because folks are not buying traditionally, going out and buying traditionally. A lot of folks have had to go online. And so now you start thinking, what kind of businesses can actually thrive during emergencies when people cannot go out of their homes, or they cannot work or do business traditionally? What type of funding resources now are there for certain businesses or might dry up for others? These are thoughts that we have to now be proactive at looking at and not reactive. And Warren Galloway is an expert in looking at funding resources, learning their new behaviors, because we're continually to study. But I want to make sure that my brother Warren Galloway had an opportunity to talk to all of the folks that are listening and reviewing this, so that they learn something. They learn something that's going to be valuable. Whether or not they are currently in business or they're seeking to go in business, it's important to learn about being prepared and knowing what resources are out there. So that's what today's workshop is all about. And I'm going to turn it over to my brother Warren Galloway. Warren, you can certainly talk about your background, and then when you're ready for me to bring up the slide presentation, I'll do that. But thank you for your generous time. Appreciate you, and I look forward to learning things myself.
Awesome, awesome. Thank you for the invitation. Thank you for the introduction. And you touched upon something before I even talk about myself. You touched upon something. I did a workshop yesterday, and I made it very clear that as a result of the pandemic, industries have made a shift in terms of how they operate. Where they've made the shift, and this is good information for you, Ms. Johnson, is that shift is online, offering an online presence. You have neighborhood businesses who traditionally were just a brick and mortar business in the neighborhood, who are now doing business online. They're either selling online or people are ordering online. So we're creating this whole new category of businesses, and I'm not sure what's going on in the cosmetology industry, but we're creating this whole new lane of businesses called tech-enabled businesses. And what that means now is that you can have your traditional brick and mortar business, but also have a tech portion online, meaning that you're creating revenue online as well as through your brick and mortar. So that's kind of like the in between a brick and mortar, a tech enabled business, and then a tech business. So this whole new lane here has really grown exponentially as a result of the pandemic because it really came out of the desire of surviving, offering online presence. I say that, Ms. Johnson, because I would think that in the cosmetology industry, there might be, we talk about competitive advantages
Mhm.
when we do business plans to see why is your business better than the competitors. There might be opportunity for you to provide some consulting or online tutoring as part of your business model to generate additional revenue, but put you in that space that has grown exponentially called the tech-enabled businesses. So please keep that in mind because you need to know what can you offer that's different than everyone else, but also generate additional revenue streams. So I just wanted to put that out there because I will touch upon tech-enabled businesses throughout, probably throughout my presentation. Uh, Once again, thank you for inviting me. Warren Galloway is my name, and a lot of people look at me as being the microloan man or what they call the capital strategist. But my background truly is in banking. I worked in banking, started working in banking in '88 on the retail side. I did retail for a little while. Then I went to the investment side of the banking industry. From there, I left, went to law school, finished law school, came back, got involved with compliance, regulatory, community development. Then I left the organization where I was doing that, and I did CRA and community lending. And then after that, I left and went to a bigger organization, which was my last corporate job, was with E-Trade. I actually ran community development for E-Trade nationwide out of Arlington, Virginia. Just like you, Ms. Johnson, I got something called the entrepreneurial itch, and I decided that I wanted to leave my corporate job and go into business
Mhm.
for myself. I was living in Washington, D.C. at the time, but I was not there long enough to create the type of relationships that you typically would need to be an
Mhm.
entrepreneur. So I ended up coming back to Detroit, where I had a lot of connections, a lot of relationships, and starting my small business consulting firm. Fast forward, that was back in 2005. Now I am the leading small business or business plan writer for disability agencies in the state of Michigan, the Michigan Rehabilitation Services and Bureau of Services for Blind Persons. I write hundreds of business plans. I also do small business coaching and mentoring through Tech Town Detroit as well as through my firm. But more recently, people know me because I held the first ever national microloan conference, and we'll talk about what microloans are. In Detroit in 2019, Steve was one of the main hosts during the conference. We had 350 people in attendance. We had 70 workshops and 70 speakers from across the country. In addition to that, I'm a published author. I've written 12 books, 6 books are business related, and I speak a lot on entrepreneurship. So my goal today is really to talk about this whole thing called business lending during a pandemic, because we are actually in a pandemic. I'm not sure if you will need additional resources for your business, but there will come a time where you will need to tap into some additional resources. And I want to teach you a strategy to be successful into getting that funding for your business. So that's me there. So any questions before we move forward, Ms. Johnson?
No, thank you.
Awesome, awesome. Okay, Steve, go ahead and put up the first slide. We did over. Okay, let's start right there. I've started adding this section to my presentation because I want to introduce to entrepreneurs different concepts that might come up in the process of them applying for funding. And there's something called capital stacking. Capital stacking means that you will probably need, and it depends on your situation, multiple funding mechanisms to reach your capital goal. If you need $100,000 for your business, you might have to work with multiple lenders. When you work with multiple lenders or multiple funding sources, we call that capital stacking. Capital stacking now is huge in a lot of urban areas because if you're not able to get funding from a bank, there are CDFIs. We call those community development financial institutions, which are typically nonprofits. We have micro lenders, and then we have community lenders, which is basically the same thing as a CDFI. So there's a chance that if you need 100,000, instead of getting 100,000 from one source, and I say that because back in, I think it was 2008 when we last went through the financial crisis here in this country. We had the huge collapse of the mortgage lending industry. And what came out of that is that a lot of lenders do not like to provide you 100% of the funding that you need for your business. Okay. And that even though that was the mortgage industry, that affected the whole lending world. So what that means is if you need 100,000, there's a great chance that that lender will say, hey, what are you bringing to the table? Okay. And what you're going to say is, well, I either have my own money or I have another lender at the table. So by having multiple funding sources together, you're doing something that's called capital stacking. Okay. Let's go to the next page. Okay. So why is capital stacking important? One, it gives you flexibility, meaning that you get to go out there and find the different funding sources that are fit for you. A lot of people feel as if, hey, only option I have is to go up to the neighborhood branch, bank branch, and apply for funding. But with capital stacking, you get to take control over where you're getting your funding from. So it gives you tremendous flexibility with multiple lenders at the table. If you make your payments on time, it helps you improve your credit. You can have good credit, you can have superior credit, or you can have bruised credit and you can get good credit. It will help you improve your credit. But more importantly, if you're a startup, it will give you the necessary funding to help you launch your business. Or if you are an existing business, it will help you support your growth. So, this capital stacking thing is really a concept to support entrepreneurship. Next slide, please. Okay. It's very, very important that if you do a capital stacking, that you let all the potential funding sources know that you're speaking to other individuals, organizations to fund your business. Part of building a relationship with a financial institution is called trust. What you want to do is if you're talking to one lender for 50,000 and you're talking to another lender for 30,000, then another lender for 20,000, let them all know. So, hey, I'm speaking to these other lenders because I'm going to capital stack my funding need. So I need multiple lenders at the table. And what that allows you to do is to build trust. Okay. It's all about relationship building and trust. Some of the lenders might work together. If you apply for funding from multiple lenders in your community, they might know each other. And what that could mean is that they could share, if you give them approval, they might be able to share loan packets. And what that means is they might not run your credit twice. They might run it one time and then share that. So there are advantages to why you should be letting each lender know who's at the table. And the other thing too is, and we don't talk enough about this, and as a startup for you, is I'm sure you're out there looking for free resources, right, Ms.
Mm-hmm.
Johnson?
Mm-hmm.
Okay. So when you talk to the lenders, and in this case, a capital stacking situation could be multiple lenders at the table. Some of them have what they call TA assistance, technical assistance, which can be some funding that they've received that they will support you and cover the cost for certain things, i.e., maybe you need an accountant. If you need an accountant and they have technical assistance, they might hire an accountant to work for you. Or if you need something like QuickBooks, they might have some money in their budget to cover QuickBooks. If you need help with your marketing or social media, your website, or product development, they might have some professionals that they can pay to help you out. So when you have multiple funded entities at the table, there could be TA money out there for you as well. Let's move to the next slide. And if you have any questions or don't understand something, please go ahead and say something. Okay, so now let's talk about the pandemic lending options. Um, we really are looking at three different options for you. Okay, outside of traditional banking, uh, traditional banking is you go through a financial institution. They will offer you a portfolio of loan products, whether it's their own loan products or some type of SBA loan products. The caveat to this is that prior to the pandemic, the only way the SBA would get involved with a loan is that they would fund or back the loan, that program that the financial institution would lend money to you. Okay, meaning that if it's an SBA loan, they guarantee, depending on the loan product, they can guarantee up to a certain amount of money that if you don't pay back, they will pay the bank back the money that you did not pay. And so they're
Mhm.
guaranteeing these loans. That was the only way that the SBA would get involved with lending. As a result of the pandemic, we had something, a whole new thing come to fruition. We had the we had the SBA do direct lending to businesses. They had the EIDL loan, which is Economic Injury Disaster Loan. They were originating the loans directly from their website, which was something new. But for the most part, you still, if you wanted to get some SBA funding, you still need to go through a financial institution. But even that has changed. Um, if were you following the PPP Payment Protection Program loan program, Ms. Johnson, last year and this year? It was all in the news, talking about
Yes.
funding for small business. Okay,
Hmm.
so what they found last summer with the PPP is that the banks couldn't handle the volume. Okay, they could not
Hmm.
handle the volume of businesses that were applying for the PPP loan.
Oh,
So
okay.
what ended up happening? The SBA expanded the entities that could lend you the PPP funding, meaning that not only do you have banks now that lend for the PPP, you have CDFIs, Community Development Financial Institutions, who now can do PPP loans. Then you
Hmm.
also have what we call fintech organizations. Those are online lenders like PayPal and Square. You know, you can now apply for PPP funding through them. So now it's much easier for small business owners to apply for the PPP funding as well as the CIDL funding, because now you don't just have to go to a bank. You have these other entities now that can originate these types of loans. And remember, I talked about the presence, online presence, that the pandemic pushed a lot of businesses online. It did the exact same thing with the SBA. So now you can apply for funding online as opposed to going into a brick and mortar, which is what you traditionally had to do with the SBA lending. So basically, there are more opportunities now for you to apply for SBA funding than ever before.
Hey, Warren, I
Um,
just want to do a quick digress a little bit regarding the SBA, because a lot of folks who are looking at this presentation may not really realize that the PPP loan is only for certain situations that
mhm.
businesses need to be aware of, because they have been people who have applied and got it and really should not have gotten it and now gotten themselves in some trouble. So I may want you to speak just a little bit to that. And also, it's important for folks who are not aware that, to your point, the Small Business Administration typically have certain programs guaranteeing that they will pay the loan back to banks, because the SBA does not lend any money out themselves, but banks are part of SBA programs. And certain programs, the SBA is saying to the bank that might run the program that if Stephen Yates don't pay you back, we
Hmm.
will pay you back a certain amount, right? That's the guarantee, that we guarantee a certain percentage of the loan that we as an SBA will pay you back to reduce your risk. If you as a bank know your risk is being reduced, then you more likely will give Stephen Yates the loan. You will give Letitia Johnson the loan. You will give Tori Bryant the loan. So, but the difference is the SBA started a program where everybody might be able to get available funding, right? So I just want you to speak just
Absolutely.
a little digress to that, because some folks who are looking at this presentation may not know those little caveats as it relates to the pandemic, the changes that the pandemic brought to the lending space.
Absolutely, and that's what I was explaining in terms of the SBA. The landscape changed. So these economic injury disaster loan, the EIDL loan, you actually apply for it directly on their website as opposed to going through a lender. That was something new. We had never seen that before. But the reason why I think the SBA decided to do direct lending, at least for this one program, is that our country was overwhelmed as a result of the pandemic. The banks out there could not handle the volume of small business applications that businesses wanted to submit. Because keep in mind, with the SBA, in order to apply for funding, typically you have to have a relationship with the bank. So if you don't have a banking relationship and you want to get to the PPP funding and you go to a bank, they may or may not take your application. At least that's what it was like last year. Okay. Now, because of the pandemic, the SBA now has a loan product you can apply for online, the EIDL loan, as well as they have fintech lenders and CDFIs, which is second on my list, who now can originate the loans for you, which means that they're now providing additional ways that you can access funding. The unfortunate thing is today is what, May 14th? There's a chance that the funding has already run out and or the funding is scheduled to end May 31st. So if you're a business owner, and I want to say hello to Miss Bryant. Hello, Miss Bryant. If you're looking to get some funding from the SBA through one of their special programs that came out during the pandemic, time is running out. And I thought I saw something about a week ago that there's the funding for the PPP might be completely committed. And I say committed, meaning that the money is there, but they have enough entrepreneurs in the pipeline that whatever funding is remaining is already going to be committed. But you probably need to check with the SBA to see if that funding is still available for you. The other thing too is, from my understanding with the PPP, the EIDL, that is not for startups, it's for existing businesses. And the purpose behind the PPP funding is to try to retain the employees that were working for you prior to the pandemic, because there is a forgivable portion of the PPP that if you retain those employees, that it could be forgiven. And so it's a sweet deal. It is a sweet deal. And the interest rate, I believe, is 1 or 2%. I mean, we've never seen anything like this before. So if there's ever a time for you to, if you're an existing business owner, to look for some additional funding through the SBA, now is the time before they run out of funding and before the deadline. Ms. Bryant, can you tell me a little bit about you and your business? Because I want to make sure that I integrate your business into the presentation.
Well, my business is called Tori Talk, and it's basically counseling for people with mental illness. And I started it, it was like the end of last year, so I don't think I qualified for loans at this time. And it's only me, so I haven't hired anyone yet, so I really don't know. I just tried to apply for the PPP loan, and they told me they needed some kind of form. So I had everything, you know, because my business is registered and everything. I have a business account, but they needed further information about my tax documentation. So I really don't know.
Got it.
Pretty much, I do counseling.
Did you generate any revenue from December until now?
I have from December, but they asked the questions that they asked were like from December, they didn't ask me from December, they asked me for the whole year of 2020. And then,
Got it.
so it didn't leave me room for 2021, which I accumulated some monies there too. So I don't understand it. I don't understand it at all.
So let me ask you this, who did you go through for the PPP? Was it through a bank or was it another type of entity?
It was another type of entity online,
Got it.
right?
Got it. Got it. So there you go. There's an example. The SBA never used to allow you to apply for their loan products online. You had to go into a bank. But because of, like I say, the huge need and volume of business owners who wanted to tap into the PPP, now they provided an opportunity, like in your case, Ms. Bryant, to apply online. If I was you, I would reach out to whoever this organization is online and talk to them a little bit further to see what you need to do to kind of get over the hump and give them what they need so your application can go through, and to make sure one that you even qualify. Because like you say, they looked at 2020 and you say you start your business in December, so you really don't have the revenue from last year because you have to show that as a result of the pandemic, your business was substantially affected. So please speak to whoever. Do you remember the name of the online entity?
I don't, but they keep
That's
on
okay.
sending me an email requesting for some kind of tax documentation. I sent them my 1099, and clearly that wasn't what they needed. So I don't know. I don't know their name.
That's okay. That's okay. Well, we're gonna keep moving, but thank you. You just proved to me that the online opportunity to apply for PPP is there because now the SBA is authorizing these online entities to provide support.
And
I mentioned.
accept
Go
my
ahead.
apologies for being late. I'm sorry. I kind of got.
Oh, that's okay. We won't talk too much about you then. Okay, Ms. Bryant. No, thank you for showing up. We really appreciate it. But I want to keep going because I have at the end of this, towards the end of this presentation, I have a strategy that I want to teach both of you in terms of steps that you need to take to be successful to move forward. And I think it would have been pretty awesome if I had done this presentation before you applied. So we'll get to that, okay? I mentioned CDFIs. When we talk about pandemic lending, we talk about SBA lending through financial institutions, through fintech, but also through CDFIs, which stand for Community Development Financial Institutions. These are nonprofits that provide lending opportunities for small business owners. And I do have a list of those on this presentation, so we will highlight those as well. And then the third option for you to get funding during the pandemic is through microlending. A microlender might be a CDFI, they might not, okay? But these are entities that are funded by the SBA or through the philanthropic community to put money back into our communities, but at a much lower number. For instance, microloans typically are $50,000 or less, okay? If you try to apply for a microloan through a bank, they're gonna tell you, we don't lend at that level. What they typically would do is refer you to a personal line of credit. I see it all the time. You come in and apply for a small business loan, they say, oh, we don't do that level, but you know what? You can get a personal line of credit. No, you wanna get a business loan. And so micro lending is kind of filling that void of where a bank does not lend, okay? Let's go to the next slide. Okay, so most of us, when we talk about lending, and we talk about small business lending, they also call it business banking, which is the same as when you go to a bank and you apply for funding. You're actually going to be dealing with someone in business banking, okay? And I talk about this thing called business banking because it's important for you to know that that is the same as small business lending. Let's go to the next slide. So we talked about the payment protection program, which is the PPP, and we've also talked about the EIDL loan, economic injury disaster loan. There's a new loan program that just rolled out. I think it's been, Steve, would you say about a week ago, called the Restaurant Revitalization Fund. That is actually a grant program if you have a restaurant. Unfortunately, neither one of you operate a restaurant, but this is huge. This is huge. I mentioned that the SBA is trying their best to get as much money into the community as possible. But this right here, this is huge because the restaurant industry has struggled. They have not had access to the capital necessary for them to survive. And the SBA rolled out this whole new program. So when we talk about what the SBA is doing during the pandemic, they're doing some incredible things. And this is an example. Now, is the SBA the only option for you if you are not a restaurant? No, your local communities are doing things as well. Is anyone aware of the local Chamber of Commerce in your community?
No.
Okay, there might be a Chamber of Commerce that's in Kennesaw that might be able to support you as a business owner. The other thing is we have small business service agencies, agencies that were started solely like the Edge Connection to support entrepreneurs. Sometimes they get special support where that money is given to them to give to entrepreneurs like you. Now, it might not even be cash. It might be, as I mentioned early on, and Ms. Bryan, you were not, didn't hear this, but I talked about some of these entities have something called technical assistance. With technical assistance, that is money that is given to a organization like the Edge Connection and potentially given and to give directly to entrepreneurs to support them, i.e., they might get some money to provide some accounting assistance to you, okay? Or some social media assistance, or some marketing assistance, or the development of a business plan. Ms. Bryan, do you have a business plan?
I have a business plan.
Awesome.
I need some marketing.
Awesome.
Marketing
Well,
help.
I'm not saying the Edge Connection has money. I'm just using them as an example, but
Oh,
there are
sure.
entities out there. I didn't want you to be calling Steve and say, Steve, I need to get some TA money. But my point is that that there are
Send me an email
organizations
though,
out there.
Tori. Let's see if we can help you.
Okay.
Awesome. But there are entities out here who can support you because they have technical assistance support. I know I'm from Michigan. We have organizations like the County Aid Society. And the County Aid Society, their sole purpose is to provide free technical assistance or very low cost. That's the other thing too. If it's not free, it could be substantially subsidized and make it very low cost to you to provide some accounting assistance. Here's the thing about your business plan. You might have a business plan, but are your financials, your 3-year projections, are they really tight? Do you know?
No.
Okay, so there's your need right there. You need to be able to speak to someone to look at those financial projections and determine if they truly speak to your business and also truly speak to a lender. Because if you need some funding, and I'm assuming you do because you're on this call, you want to make sure those numbers reflect what what you should be generating, since in theory you're still a startup or small business, but what you should be generating as a business owner over the next 3 years. So there are professionals out there that can support you. Steve, is there a small business development center in the Atlanta area? I know they're in every state.
Yeah, so like the Edge Connection is a small business development center.
Got it. Okay. So does the Edge Connection provide like coaches to review business plans and provide one-on-one support?
Yes, yep, they sure do. I'm actually one of them.
There you go. Right there. You're speaking to a coach. There's your support right there. There's your TA right here on this call, Stephen Yates. So just know he can help you out, and there are other entities. I know there's SCORE down in the Georgia area, and there might be some other entities that provide support. And don't be afraid to take advantage of multiple support mechanisms to help you out. Let's go to the next slide. Okay, we've already talked a little bit about community development financial institutions. Let's keep going. Okay, I mentioned to you that I was going to list the different CDFIs. So here's a complete list of all the CDFIs in Georgia. What this means is there are funders on this list that will fund your business. Okay. And Steve, will they get a copy of this presentation as well? So they'll get this information?
Yeah, it's being taped. So if they want to get a copy of this, they can just request it and we'll send them the link.
Well, what about the presentation? Will they get a copy of the presentation as well?
Oh, if you want them to have one, they can ask for that and I can certainly get that to them.
Oh, absolutely. Absolutely. They can have, because I want them to get this list. This list is important. This is a comprehensive list of all the community development financial institutions that are in Georgia, which means that these are entities that potentially could fund you money. Okay, so make sure that you get a copy of this presentation. The next type of lending, you can go to the next slide. The next type of lending is microloans, and I want to spend just a little time on microloans. Microloans, it's a program that really started overseas in India and a lot of third world countries, where they would lend very small loan amounts to business owners. In some communities, $500 will be a lot of money, but it will help them start a business, grow a business, and help take care of their family. We followed, I believe, microlending started in the early 1970s. And what it provided was the opportunity for you to apply for smaller amounts, less than what a bank would lend, but at least give you enough capital to either start your business or grow your business. So the way the program is set up is that the maximum amount that you can get is $50,000. Okay, they say on here the average microloan is around $13,000, but some microlenders will lend at minimum 500 or 1,000. It's all about what your capital need is, up to 50,000. What's so great about microloan programs? Well, first of all, the loans are originated by nonprofits. Okay, and these nonprofits get their funding, I mentioned this earlier, get their funding from the SBA and the philanthropic community. Okay, and banks contribute to funding microloans. And what it gives them is the ability to have flexible underwriting criteria. Okay, do you have to have perfect credit for a microloan? No, because they already know there are a lot of business owners that might have bruises on their credit. That's okay. They will work with you. You don't have to have pristine credit. How can you use microloans? Microloans can be used for working capital. Do you ladies know what working capital is?
No, I don't.
Okay, so let me talk a little bit about that, because I want to make sure you understand what this concept of working capital is. Ms. Johnson, you're going to start your cosmetology business. You're going to get your funding. You're going to open your doors. Once your doors open, how are you going to cover your costs? Do you have a lot of money that's going to be sitting in the bank and you can just cover your costs? There's a great chance that maybe you might or you might not. What working capital does, it gives you the freedom to cover your costs and go ahead and operate your business and grow it and make it profitable. I.e., you open up your new business. That grand opening is phenomenal. I tell everybody the grand opening is phenomenal, but that first business day after the grand opening, reality kicks in. Reality kicks in because now you have to work hard to get people to come through your doors. Okay. As a result, your expenses are going to be higher than your revenue. And it's going to take time for that shift where your revenue will exceed your expenses. Well, that might take 3 months. That might take 6 months. So there's a deficit and you have to cover that deficit. So unless you have a lot of money sitting in the bank that you can use to cover that deficit, you might want to look at not only a loan to open up your business, but you want to look at maybe working capital. So how do you figure out working capital? Because what working capital would do, it would give you the freedom to go ahead and pay your bills, your employees, your utilities, your supplies, or any other regular expenses that you have. It gives you the ability to pay those things while you're building your business and pushing your revenue above your expenses. Okay. How do you know how much you need? That's why you need a business plan. Like Ms. Bryant, you have a business plan. You should be able to go to the financial section of your business, your profit and loss statement, and be able to take a look at what your monthly expenses are monthly. And then you figure out, okay, maybe I might, based on my projections, I won't be profitable for about 3-4 months. So I need to take what my monthly expenses are and multiply it by 3 or 4, find out what that total is, and then ask for that amount at the very beginning of requesting money for my business. So if I need 50,000 to open up my business, I might need another 20,000 to cover my my expenses for 3 months, which will be my working capital. Okay. What that allows you to do is, and I've seen business owners do this before. I've had business owners say, listen here, all I want to do is get my doors open. They get their doors open and they say, well, I'm just going to flip the money back into my business. It doesn't always work out that way. So guess what? They struggle from day one because your expenses are exceeding your revenue for a while. So, but if you come with working capital, you put yourself in a much better position to go ahead, pay your expenses because you got this money to tap into while you build your business, and yet you're not stressed out about how am I going to pay my employees this month because you have working capital. Now, working capital typically is a line of credit. It's a line of credit that you tap into only when you need to, and you pay it when you pay it back. You get to utilize that money again. So if your capital need is 20,000, you might really only need a $7,000 or $8,000 line of credit, because in order for your a line of credit to work is that you have to use it, pay it down, use it, pay it down. And you will get, if you do follow that concept, you will get $20,000, $30,000 worth of use out of it because you're constantly using it and paying it down. That's how working capital line of credit works. So keep that in mind. Not only do you want to get your business open, but you want to be able to cover your costs during the early stages of your business until your revenue exceeds your expenses. Any questions about that? Got it. Let's keep going. So you can use microloans for inventories, supplies, and so forth. No, that's okay, Steve. You can go to the next page. Okay, got it. Now, loans are not the only way you can fund your business. There are some grants out here, but, and I had to ask Steve this as well. If you're a startup business, I've yet to see a grant out there for a startup business. I have people all the time saying, well, I'm going to get a grant to start a business. I'm waiting for someone to tell me where there's a grant program out here for startups so I can tell everybody and their mama, like, listen here, this is what, if you want to start a business, go get this grant. Steve, have you ever heard of a grant for startup businesses? No. Okay. No. Okay. I just want to make sure I'm consistent.
And it's crazy because everyone says, hey, give me some free money. I want to open up a barbershop. Well, you know, it doesn't happen that way.
No, it doesn't. It doesn't. Well, just note that as an existing business, we're seeing more and more grants as a result of the pandemic. And typically they're called stabilization grants. We're seeing, and those are, I'm not seeing a lot, I haven't seen a lot lately, but early on in the pandemic, businesses were getting $5,000, $10,000, $15,000, $20,000 to stabilize them in the early stages of the pandemic. I've seen some as recently as earlier this year, but I think the economy is going to open up across the country. So those are going to be disappearing. And so I don't know what what organizations are still doing stabilization grants, but they still could be some out there. So Ms. Bryant, you might still be eligible to apply for a stabilization grant, but I'm not sure who's doing it right now. So take a look at that as an option. Crowdfunding. Most people, when they think of crowdfunding, you really think about GoMe. What's that? What's the name of that crowdfunder? GoFundMe. That's the name of it. GoFundMe. A lot of people look at a GoFundMe account as only when people have emergencies or only when someone make their transition. But you know what? GoFundMe is a crowdfunder that can also be used to raise money for your business. Now, the tricky part about a crowdfunder is that it's typically you need to have a very, very strong network of people in your family, in your circle, and your associates who potentially could fund you. If you don't have a large network, crowdfunding might not work, but it is still a tool where you can try to raise money for your business. Pitch competitions. Is anyone familiar with pitch competitions? Let me tell you a little bit about pitch competitions. Pitch competitions prior to the pandemic were getting real popular. It used to be called business plan pitch competitions. And what you do is you pitch your business idea to a group of judges, and they would identify which of the businesses were the best, and then you would receive cash prizes. So pitch competitions became very, very popular. You have some pitch competitions for industry related businesses, or you just have general pitch competitions. Any type of business can participate. I know there are pitch competitions for women owned businesses, and I've seen business owners literally get $10,000 after doing a 3-minute pitch. And so, and what you find is with pitch competitions, you might not be successful the first time, or if you're just that good, you blow them away, you could get it the first time. But I've seen people making a job to apply for all the pitch competitions out there, and they get better and better every time they pitch until they start winning. There is truly an art to pitching your business, and they learn how to do it. But guess what? There are coaches out here who can work with you, who can help you become a very good pitcher of your business. So do not sleep on pitch competitions. Personal equity. We're going to talk a little bit more about personal equity later on. Investors. And there are investors out there that you might want to seek who can fund your business. A lot of people say, hey, I want to have an investor in my business. Well, the first thing you need is that business plan. And so, Ms. Bryant, you have one, and Ms. Johnson, we need to get you one. You need to have a business plan. I put credit cards on here. But I do not recommend using credit cards. I know a few business owners that have used credit cards, but they had excellent credit, and on their credit cards, there was 0% interest, okay? If you use credit cards and you don't have the best credit cards, paying 15, 16, 17, 18, 20%, 25% interest, and that's huge. So I would not recommend credit cards. Some states have what they call hiring incentives, that if you hire a certain displaced population, like returning citizens, seniors, youth, low-income people, out-of-work people, if you have a business where you need to hire people and your state or your local municipality has hiring incentives or tax credits, you might want to tap into it, because some of the hiring incentives could be on-the-job training money. On-the-job training money would mean that an agency will place an individual at your business, Ms. Bryan, and allow them to work for you for a month or 2 or 3 months, and they pay their employee costs for that. So basically, someone's working for you for free for 3 months. They don't tell you, they don't guarantee that they get a job after that training period, but because if they don't work out, it's okay, because typically they say, that's good. Now my client has some on-the-job training to put on their resume. But if they're phenomenal employees and you want to hire them, now you get somebody you've already trained and you hire them after 3 months. So the hiring incentives and tax credits out there, you can definitely take advantage of. And the other one is, I put it at the end, you still can go to banks, and we talked about banks already, to get funding, okay? Any questions about these other ways to fund a business? Let's keep moving. Still have a lot of information to cover. So on here, I just put the list of the different micro lenders that are in Georgia. Some of these micro lenders are CDFIs, so you will find some of them on the other list where I have a list of CDFIs, but I just wanted to put on here that you do have micro lenders in Atlanta and all throughout the state of Georgia, okay? And you'll get a copy of this presentation as well. Just let Steve know. Okay, let's go to the next slide. Okay, so it's 10:18. This is, if you don't listen to anything else I say today, this is the one slide we're going to spend a lot of time on, because I love this portion of the presentation, because I change mindsets. Typically, when you apply for funding, you just go in and apply for funding. You just think, oh, I'm gonna just go in and apply for funding. But what I try to teach you is change your mindset. I need you to go in and apply for funding with a strategy to get a yes declination on your loan. So I created over the years 14 different things that you need to look at to identify the right lender for you and take control of this loan application process. So you don't learn anything else from me today. You need to learn this information here about the 14 steps. And in theory, what I want you to do is to take these steps and turn them into questions that you ask of each lender that you talk to about funding. Okay. And this will create some form of efficiency, meaning that it will allow you to spend little or no time with lenders who won't fund your type of business, and more time with the lenders who will potentially fund businesses for you. So let's go ahead and get started on this. I'm excited about this slide here. Number one, so if you go in, or in these days, if you call someone or do a Zoom call and you talk to them about a loan, one of the first things you want to ask them is, okay, do you have a line of credit versus a term loan, or do you have both? You need to know. We talked about the line of credit. Line of credit is the exact same thing that I spoke on concerning working capital, okay? It's a line of credit. A term loan means that ABC lender, you apply for 50,000, you close on that loan, they give you a check for 50,000, and then you make equal monthly payments for 36, 48, or 60 months. That's a term loan. You get the money up front. Whereas when I talk about the line of credit, you just tap into that line of credit. It's like a credit card without a credit card. You just use it when you need it and you pay it down. Okay. So what you need to find out, if you don't need working capital and all you need is money to build out your business, your brick and mortar, then you really only need a term loan. So you need to find out, okay, lender A, B, C, microloan, do you offer line of credit or a term loan? If they tell you that they only offer a line of credit, guess what? And you need a term loan, are you going to go with that lender? No, because guess what? They don't offer a term loan. So you stop right there with that lender. You need to go no further, waste their time, waste your time. If they offer a term loan, a line of credit and a term loan, then you can say, okay, let's go to the next question, because I know you have a term loan because that's what I need for my business. Okay. Now, say you're Ms. Bryant, you're an existing business, okay, and maybe you just need some additional working capital. If you go to the bank and they say they have a line, they have only term loans, do you move forward with that bank? No. No, the answer is no. I answer for you.
Why?
because remember, you need working capital. You need a line of credit. So if they only offer a term loan, they can't meet your need. So why waste time with them when you already know the number one question is, do you offer a term loan or a line of credit? And they say, no, we only offer a term loan. Guess what? Thank you. Appreciate you. Now we're gonna go to another lender. Okay. You just don't waste any. This is creating efficiencies in terms of how you interact with banks. Okay. Let's go to number two. Type of business they will lend to. So whether you know it or not, there are certain businesses out there that might not lend to you. I give you an example. Maybe where you're located, and that number four speaks to that as well. Where are you located at, Ms. Bryant?
I'm currently in Latonia, Georgia.
And how far is that? How far is that from Atlanta?
I want to say about 30 minutes.
Okay, 30 minutes. So now you go to apply for funding, and it comes to find out that they only lend to small businesses that are located in the metro or in the city. Let me be more specific, in the city of Atlanta. Are you going to move forward with that loan?
No.
No, because they won't lend to you. Or guess what? Maybe you say you have a mental health organization, consulting firm, correct? Okay. Say they only lend to restaurants. Do you move forward with them? No. Maybe they only lend to cosmetology businesses. Ms. Johnson, do you move forward with them?
No. Yes.
Yes, yeah. I specifically geared that question for you, okay? See, for Ms. Bryant, you would not, but for you, Ms. Johnson, you would. So the type of business that you own
Mm-hmm.
could dictate whether you move forward with that lender or not. There are just certain lenders that only lend to certain types of businesses. And also, do not be offended if a lender say we do not lend to your type of business. You just go to the next lender. What we find is some CDFIs, some microlenders are started to support a specific industry. There are CDFIs and microlenders who solely only fund restaurants.
Mm-hmm.
There are CDFIs and microlenders who solely only fund tech businesses. So don't be offended. You just realize that this one particular funder, you're not going to apply for funding through them because they don't fund your industry, and that's okay. Okay. The other thing too is number 3. You need to ask them what is the amount that they will lend, what is their max and what's their minimum.
Mm-hmm.
And Ms. Bryan, if you need $60,000, use that as an example. But a microlender only lends up to 50,000. Do you go to that microlender?
No.
Well, let me say, you can say no, or no. You missed an important portion of this presentation. Ms. Johnson, what could you do if the microlender only lends 50,000, but you need 60,000? How would you fund your business?
You can try that in another one to get the rest.
Exactly, but what do we call that?
I forgot the name.
Capital stacking. Remember we talked about that
Yes.
in the very beginning? Yes.
Yes.
So let me just do a brief overview, Ms. Johnson. So we talked about something called capital stacking. And what that means is maybe you might have to have multiple lenders lend money to you to meet your capital need. So if it's 60,000, you might get 50,000 from a micro lender, and you go to another micro lender and get another 10,000. Guess what? Your funding need is met. Or you can go to a CDFI, which lends more than a micro lender, and they might lend you the full 60,000. So you just have to kind of gauge where you're going to get your funding from and whether or not you need to have multiple lenders.
Calling to get with help desk. This is Bishop. We'll start by getting your name, SOG, and the county that you're calling from.
Can you hear me? Okay. So let's go to number 4. Number 4, it talks about geographic location. I've already used a scenario that if you are a business located in the city of Atlanta, and they only lend to a business in the city of Atlanta, well, you can get some funding. But if you live outside in the metro area, or in the rural area, or in another metropolitan area in Georgia, they're not going to lend to you. So one of the questions you want to ask that lender is, what areas do you lend to? What areas in the state or areas in the community? There could be lenders that only lend in certain neighborhoods. You want to make sure that you fall within a geographic area that they target their lending for. If they don't lend in your community, then you want to stop right there and then not move forward. Okay. Number 5, there are funders out there that lend to you based on your ethnic, race, nationality, or gender. We find micro lenders and CDFIs who are founded to support women-owned businesses. If I'm a male and I'm going to apply for funding through this funder who lends to women-owned businesses, do you think they're going to lend money to me? Well,
No.
I'm gonna tell you what some of these organizations have said. We will lend a little to a few men, just a few of you to satisfy you. Okay, like okay, then I'll get some funding from you. But for the most part, their mission is to support women-owned businesses. And then you have funds that support African American owned businesses, Asian owned businesses, Arab owned businesses. So you need to find out if you fall within any of these categories of target markets that they want to lend to. Okay. If you don't fall into any of these categories, then you stop right there with that lender because they will not lend to you. A big question that comes up all the time is collateral. Okay, are you familiar with what collateral is? Let's talk a little bit about collateral.
Yes.
Collateral means that if I'm going to lend you money, I'm going to lend you 50,000. I need some type of asset that you have that I could put a lien on to use as collateral against that loan. So it could be your house, it could be your car, it could be some other major asset. Each lender determines what they will use as collateral. The question becomes, what if I don't have collateral? Or what if I don't have enough collateral to back that loan? So in a case-by-case situation, you have to talk to the lenders, okay? Some may require collateral, some may not. You need to find out, because if they do require collateral, do you have the type and enough collateral to back the loan that you want to get? The one thing that I can say for micro lenders is that micro lenders really aren't in the business of taking people's property. They're in the business of lending money to the community. At the end of the day, all they want you to do is to pay them back, because most of the time they have very limited funding. So when you pay them back, they re-lend that money to another business. And so in saying that, they work very closely with you to ensure that you pay them back, because they need that money back from you. So they may or may not ask for collateral, but you have to ask that question, because the last thing you want to do is go through the application process and get all the way to getting ready to close that loan. And then they say, okay, well, now we need to know what collateral you have before we close. And if you don't have collateral, if you don't have enough collateral, that could be a deal breaker, but it'll be late in the game. We don't want that to happen. Okay?
I have a question.
Yes.
Is there any penalties, kind of like when you run your credit? Is there any penalties for if you sign up for these loans and be rejected?
So you're making reference if you have to apply for multiple loans, correct?
Yes, sir.
So I mean, hopefully they just do soft inquiries onto your credit, and that it really does not affect your credit score. But I think if you apply for a couple of loans and it shows up as inquiries on your credit report, you could easily explain that and tell them that you apply for. Once again, I talked about being open and telling them all the lenders that you're applying for multiple loans. Just tell them up front. The other thing too is if you're applying for more than one loan and the lenders in your community, they might know each other, and you might be able to give them approval to share your loan packet instead of rerunning your credit. Okay. I'm going to talk a little bit also about where we're at. We're at the collateral. Let's just talk about this. So I'm big on coaching business owners and being proactive in explaining their situations. If there is a situation that needs to be explained and up front, write a letter of explanation and include it in your loan packet. I'm gonna give you an example. Maybe you had a few late payments because of the pandemic. Everybody knows about the pandemic, okay? Maybe you lost your job. Maybe you transitioned jobs. Maybe you went through a divorce. Maybe you had a medical emergency. If you know these life events happened to you and that it affected your credit or affected something else, provide a letter of explanation. I'm gonna tell you why. When you apply for a loan, you know who you're gonna be dealing with. You're gonna be dealing with that loan officer, and you're gonna be building trust with that loan officer, okay? They're gonna get to know you. They're gonna get to believe in your business, and they wanna advocate and get this funding for you. But the loan ultimately will have to go to an underwriter, and depending on the amount that you apply for, it might have to go to a loan committee. Guess what, Ms. Bryan and Ms. Johnson? They don't know either one of you. They don't have that personal relationship. And you know what I equate it to? A resume. When you do a resume, you upload it. You don't know who in the back end is going to look at that. So you don't know how they're going to judge you. But what you have to do is sell yourself to that organization. So when you apply for a loan, you're selling yourself to the underwriter and or potentially that loan committee. So if you know there's some questions up front that they might have, it's okay to put it in writing,
Thank you for
put it
calling
in
the
there,
Gateway Help Desk. This is
okay? So that they will be, if they have any concerns or have any red flags or have any questions, because you knew these were some things that they might have questions about, and or you might have talked to your loan officer and say, hey, what are some of the things I should look for that maybe I need to explain? You put that in there, it keeps your application moving. If they red flags pop up and they have questions, it's going to stop the loan process. Then they're going to come back and ask you questions. Now you're delaying them making a decision on whether or not your loan is approved. Okay, you follow that? That's taking a proactive approach. Okay, let's keep moving. Number 7, percentage of personal equity. Now, I mentioned earlier, and I'm not sure if you were on the call at the time, Ms. Bryant, but the days of them providing 100% of your funding are over with. You know, you have to have skin in the game. And what is skin in the game? Well, how much are you going to put into the business? Okay, if you need 100,000, they may ask you, well, how much personal equity, which can be, are you building out some of the space yourself? Are you buying equipment yourself? Are you putting money on the table to cover some of your costs? What is your personal equity in this business? Because we only lend 80% of what you need, but you're going to need to put 20% of it in there. Or with CDFIs and microlenders, it could be a much lower number. I've seen 5, 6, 7% personal equity into a business. You need to find out what is that number from that lender. Because guess what? You might be approved, okay? You might like go, wow, this is phenomenal, I've been approved. And then they're gonna ask you, what is your personal equity? And if they say 15% of what your need is, and you don't have that 15%, the deal is not gonna move forward. So you need to find out upfront, what is your required personal equity into the business, okay? Do you understand that, how that works? Very, very important. All these questions here, all these 14 steps, these are literally, you turn them into questions and you ask the lender. What I tell business owners is that I want you to have a good process of applying for funding. If you don't ask these questions, you might run into some barriers and get really frustrated. But if you plan and have the strategy and ask these questions, it becomes a good experience. And guess what? You take control of the process. You take control of the process in identifying which lender is a fit for you, instead of just going out there and applying and hoping someone approve you. No, I'm going to find a lender that is a fit for me, because I'm going to ask all 14 of these questions. And when I'm done, I will have the lender or lenders identified that I know that I have a very good chance of being approved for funding from. Let's keep moving. Number 8, business plan required or not? Well, first of all, not every lender requires a business plan, but majority of them do. Okay. If you don't have a business plan, to some lenders, they might think that you're not prepared to move forward. At the end of the day, a business plan is your roadmap. You've thought out how you're going to operate your business for 3 years. You figured out how you're going to market your business. How are you going to hire people? Who your target market is? Who are you? Okay, those are questions that are answered in the business plan. The lenders read the business plan. Okay, I mentioned to you before that the underwriter and the loan committee, they don't know who Ms. Brown and Ms. Johnson is. They don't. But when they read that business plan, now they get to know who you are and what you're trying to do. And you want to make sure that you speak to them through that business plan. I mentioned the example of a resume. A resume, you sell yourself with a resume for a job, right? You sell yourself. A business plan, you sell your business through the business plan. You communicate through that business plan in a way that tells that lender, listen here, loan me the money because this is the impact that I'm going to have in the community. And I tell you now, these CDFIs and these microlenders love supporting businesses that are willing to hire people from the community, to support the surrounding neighborhood, to be part of an economic development of a neighborhood. Because what you do, the role that you play as small business owners, you have a chance to change lives in your community. Large corporations are not going to go into a lot of the urban neighborhoods, a lot of the low to moderate income neighborhoods, and you might not go. I don't know. But if you do, you have a greater chance of getting support because they realize that in order for us to change the conditions of our urban communities, people need jobs. And Ms. Bryan and Ms. Johnson, you will hire those, I mentioned this before, returning citizens, seniors, low income, veterans, disabled, youth. You will give them an opportunity. So to me, if I know you're going to do that and you're going to mention this in your business plan too, keep that in mind. The target markets I just identified, you're going to mention in your business plan. And if I read if I'm an underwriter or a loan committee and I read that business plan and I say, wow, Ms. Johnson, Ms. Bryant, they're going to be a change agent in the community. We're going to support them. So you can, as long as you communicate the impact you're going to have, there's also a greater chance of you being approved. Now, that all of this has to be said in your business plan and it has to speak for you to the individuals who want to approve your loan. Now, the other reason why you want to have a business plan is that pitch competitions might require it, grant programs might require it. Some of the agencies that you want to get support from might require it. But business plans, you need it anyway. It is a working document that provides guidance to you as a business owner. So you do need a business plan nevertheless, but majority of the lenders will require a business plan. Any questions about the requirements of a business plan?
No.
Because we're working with Ms. Johnson to get hers done, right, Ms. Johnson?
Yes.
And then Ms. Bryant, we're going to help revise yours so that your business plan is going to speak who you are as a business owner, correct?
Absolutely.
Here's another key point here, number 9, and we're almost done. But let me tell you, when you finish all 14 of these, you're going to have a new appreciation for this loan process. Grace period of interest payments. Okay. I'm going to use you, Ms. Johnson, as the example. You're going to open up I'm just saying a cosmetology school, and you're going to have a brand new brick and mortar. Okay. So you find yourself needing 100,000. You get approved for 100,000. You're excited. You know, you're about to meet with the municipality to get the permits. You're going to get some builders or some construction workers to build out a space for you. Okay. But at the loan closing, they say, well, your first payment is due 30 days from the close of the loan. You say, okay, no problem. But then you know it's going to take you 3 months to build out that space before you open. Is there a problem with you making a payment in 30 days?
Yes. I think so.
You know why? You're absolutely correct. You know why? Because guess what? Your business is not even generating revenue in 30 days. You don't open for 3 months. So you're making a payment. You're going to be making a payment on a loan for your business that hasn't even opened and generated revenue. That's not a good thing. I've seen business owners, they get excited about getting approved, but they don't ask the right questions. And 30 days into the build out, they're making payments and they're struggling before the doors even open. So what you want to ask the lender is, okay, is there a grace period? Meaning that, will my first payment be due in 30 days or will it be done in 90 days when my business open? Or do I only make interest only payments, which means that the interest only payments are really, really low. So you want to say, am I going to have a grace period or am I going to have interest only payment? Very, very, very important. Okay, because we don't want you to struggle before your door is even open. And trust me, I've seen that happen before, and that is not a good situation for our entrepreneur. You're struggling before your door is open. It's not good. Survival is going to be real difficult. Number 10, we've already talked about working capital. Number 11, we've already talked about capital stacking. Let's talk about credit criteria. What is the credit criteria for you to be approved for a loan? You can ask them that question. If you have bruises or if you have special situations that took place that show up in your credit report, write a credit explanation letter. Break down your credit report. Okay? Because a credit report does not tell them what has been going on in your life. Okay? The final two on this list is 13 and 14. And if you notice, when you apply for a loan, what's typically the first thing you're looking at? You're looking at, okay, what is the interest rate, right?
Hmm.
You know, this interest rate is number 14 on my list. There are 13 things you're going to be concerned about before you even ask about interest rate. The reason why I changed that mindset is that before we even talk about interest rate, let's first see if you even can fit the other criteria. Forget interest rate right now. Do I fit the other criteria?
Hmm.
Because irrelevant of the interest rate, if I don't fit the criteria, then I'm not moving forward with this lender. So interest rate is always last. Then you see 13, which is customer service. And I'm going to go over this and tell you how paramount and important it is to have great customer service from a lender. Say you apply for funding from one lender and it's 8%. The interest rate for the loan is 8%. And you had an outstanding relationship with that loan officer that you know that loan officer will go to bat for you to get you approved. And then you apply for another loan with another lender and the interest rate is 6%. But you had a very contentious relationship with the loan officer. You did not hit it off well. There was lack of communication. It frustrated you. But the interest rate is 6%. But the lender that you had a great relationship with is 8%, but you had a phenomenal relationship with that loan officer. And guess what? That loan officer is going to go to bat for you and try to get you everything that you need. Who are you going to go for that loan? Are you going to go with the one with the lower interest rate, or are you going to go with the one with slightly higher interest rate?
Slightly higher.
Hmm.
Slightly higher. What about you, Ms. Johnson?
Yes, slightly higher.
Got it. Some people will go and say, listen here, it's not personal. I'm going to go with the lower interest rate.
Mm-mm.
Here's where the problem lies. And we found this out during the pandemic. When you run into problems, who's
Mhm.
most likely going to help you out during a pandemic? That loan officer who will go to bat for you.
Yes.
They would take the initiative and reach out to you. And then they'll tell you about special funding opportunities and grants that are out there because they want to
Mhm.
see you succeed because they believe in you. Now, the person who goes with the 6%, he or she had a contentious relationship with the loan officer. You think the loan officer cares?
No.
No, no. So we found during this pandemic that your relationship with the loan officer and that lender is highly important.
Important. Hmm.
And here's the other thing. Remember I talked about how it takes time for your revenue to exceed your expenses. Now, say for instance, you got working capital for 3 months, but what if it takes you 6 months to get your revenue to exceed your expenses? And you need a little loan help. Like for instance, can you defer some payments? Guess what? You have an excellent relationship with that loan officer. He or she is going to do whatever they can to help you out and try to get it approved so you don't have to pay back that loan for a couple more months. Are you going to go back and talk to that other loan officer who's very contentious with you? No.
No.
You're already mad at them. They're already mad at you, so they're not going to do anything for you. So to end this, these are the 14 steps to identify the right lender, but really these are the 14 questions you want to ask of each lender to determine if you want to go with them. And if you do this, you have a very, very good experience with the loan process. Any questions? Did everyone follow me? Was this
Yes.
information good?
Yes.
Yes, sir.
This is my favorite slide. If Steve don't even send you the whole PowerPoint presentation, take a picture of this and hold on to it with dear life. That's all I'm saying. Because guess what? If you do these things, not only will you get the right loan, but you'll get the loan that you deserve as a business owner and you'll be happy with it. But if you don't have these 14 steps, you just out there throwing darts and applying. You don't know what you're doing. You think, oh, this is the normal process. No, Warren Galloway teaching you how to do it right and how to be successful. And that's why this is my favorite slide on how to identify the right lender.
You know, you can do a presentation just on this slide by itself.
Just on this slide. Exactly. I do presentations just on this slide. That's the crazy part. I do. Because this information is powerful, impactful, and it makes a difference in terms of your experience applying for funding. I need you to be successful. That's why I'm going over these 14 steps. I need you to be successful and hire people for the community. I want you to come back and tell Steve, listen, I followed those 14 steps that Mr. Galloway went over, and my business is open and I'm hiring people for the community. That's what I want to hear. That's the impact I want to make. So Steve, let's stop right here and just see if we met the needs of our guests today.
Yeah.
Yeah, what do you guys feel? What do you look to get out of this presentation, and did you get it? And is there any questions that you guys have?
Yeah, like I got a lot of information. Definitely understanding the importance. I mean, I knew it was important, but not as important for the business. What is it called? Business plan.
Yeah.
How important that is. All of these. I wrote a lot of things down, so yeah, I'm very satisfied, and I got what I needed. So thank you so much.
No, appreciate you participating today. Thank you.
Thank you.
All right,
And
so
see,
we have
I was gonna say, Ms. Johnson, see, you have the advantage of being in what we call the ideation stage. You're doing your research. So I expect you to do big things because you have no
Yes.
excuse now. Okay.
I know.
absolutely, absolutely. Well, Warren, again, man, I really appreciate your time, your expertise, your passion, your interest in making sure that you accommodate those that are attending to ensure that you can handle some of their questions relative to their business and funding opportunities. Again, I appreciate you as a brother, appreciate your expertise. We look for you to come back to give us more of your knowledge and wisdom from in other areas of business development. And we'll see you soon. So if you guys don't have any other questions, we're going to conclude today's presentation. Again, we will be doing these presentations every month or every other month. You know, I try my best to keep you all up to date on what we got going on. So look for emails to come your way. And if you look to participate again, just go ahead and sign back up and register. If you have any questions when we get done with this presentation, if you have anything you want to ask specifically to Warren, please just go ahead and email me and I'll connect you directly to Warren and he can give you some additional insight. Warren, you want to talk about some of the books that you have written regarding the business development and maybe how they might be able to take a look at maybe even either purchasing or reviewing it online?
Absolutely. So I've written 12 books. 6 books are business related books. Believe it or not, this page with the 14 steps on how to identify the right lender, that's actually part of probably my most successful book, which is called How to Successfully Apply for Microloans. That is the premise of the book. You really get the premise of the book on that one page. But I've written books on microlending resources, 10 easy steps to starting a business in Michigan, 10 easy steps to starting a business in Michigan, Youth Edition. I'm working, one of the next books that I'm looking to publish will be 10 easy steps to starting a business in Georgia. So I even have Georgia on my mind, as they would say, okay. I've done a book on basic questions and answers about entrepreneurship. So today, really, you got one of my books just through this presentation. And because it's the same curriculum that I use to create how to successfully apply for a microloan.
Very good, very good. So I want to also mention, since just came to my mind, that Warren has had me be a part of a new national radio program that he's launching in June. And this radio program will talk about current events, we'll talk about business development, talk about a lot of different things. So if you guys are interested in being able to follow that national radio program, online radio program, I'll definitely make sure that you guys get that information, that link to hear Warren again. I'll be a part of it. And we have a couple other dynamic speakers that also will be talking about current events that can help educate you, give you some wisdom in life, as well as about your business development.
Exactly. And I do have a show called Doing Business with Warren Galloway. If you go to my website, my personal website, which is warrengalloway.com, has everything on there. My show, all my speaking engagements. You can hear me talk about the same presentation. But more importantly, if you want to take a look at that show, I think one episode is on there. The newest episode just came out on Thursday. But take a look at that, and I talk about different things relating to entrepreneurship. My goal is to be the spokesperson for microlending across the nation, how to properly access microlending funding for your business. So that's where you'll see my area of expertise.
All right. Well, we are going to give Warren and you guys back your day. I hope again you got something out of it, and look forward to you guys coming on board on another great topic next couple months.
Okay,
All right.
Thank you.
Take care. Have a great
Both
weekend
of you
now.
guys, Letitia and
You
Brian,
too.
both of you guys reach back out to me regarding your specific business needs, okay?
I definitely will.
All right. Take care.
Bye-bye.
Thank you.
Thanks, Warren. Bye-bye.